Hey everyone, yesterday Newgen Software announced its quarterly result, and after the result, Newgen share price fell down sharply. And in last 1 year, Newgen share price is nearly down 50% from its peak. So there were multiple requests to create a video on Newgen. So I have divided this video in 3 parts. In first part, I would discuss about the key development in the company over the last 1 year. In second part, I would discuss the financials, including the quarterly result. And in third part, I would discuss the future prospect and conclude my take on the company. So last year there were 3 major developments that happened at Newgen which I would like to highlight. First major development was Newgen business model transition from license to subscription model. Now this is very important, try to understand it carefully. So until 2021, Newgen major business was focused towards license model where it would give the license to organization to use its product, and that would be more of a long-term agreement. So Newgen would get the revenues upfront. However, now it has transitioned to cloud and subscription model where organizations can subscribe to their products which are on cloud and pay on a periodic basis as per usage. Although the mature markets like US were already on subscription model, but now the focus is on emerging market like India to move to subscription model. Now I am not sure how many of you are aware, but software as a service is a globally emerging software delivery model in which the application software is delivered remotely through a subscription-based model rather than being sold for perpetual use. It is a low-cost way for businesses to obtain the same benefit of commercially licensed software without the associated complexity and high procurement cost. For example, earlier enterprises would install Microsoft software on their computers, but now they can access it online on a subscription basis. Likewise, every product-based company is moving to SaaS-based subscription model. This transition from license to subscription has some impact on the revenue growth, as license model generated upfront revenue against the subscription model. However, this subscription model is more of long-term in nature. Newgen chairman Mr. Diwakar Nigam mentioned in its latest annual report that we have been able to achieve a smooth transition from license to cloud and subscription revenue that are more long-term and multi-year in nature, along with accomplishing growth. Newgen cloud and subscription revenue model is growing quickly with 23% revenue growth in FY22. Then second major development was appointment of new Chief Executive Officer and Chief Operating Officer. Newgen has appointed Virender Jeet as its new CEO and Tarun Nandwani as Chief Operating Officer. Virender Jeet has been a part of Newgen since its inception in 1992, and he was the Senior VP of Sales Marketing Product before promoted as CEO of Newgen. And Mr. Tarun Nandwani has been with Newgen for over 27 years and has been successfully heading customer relationship management, commercial activities, new solution and application development. Then third major development was building a comprehensive product portfolio. Newgen unveiled its new brand identity and launched Newgen One, which is a unified digital transformation platform. This platform helps in deploying complex content-driven and customer-engaging business application on the cloud. And since the industry is witnessing a substantial traction for artificial intelligence and machine learning enabled solution, Newgen has acquired Number Theory in January 22, which is an AI and ML based enterprise data management firm. This would further strengthen Newgen's capability. As of today, Newgen has a total of 23 patents granted across India and US out of 43 patents filed so far. Its R&D team has grown to about 580 employees in FY22 against 250 employees in FY18. And its R&D investment as a percentage of sale is 10.2% in FY22 versus 7.2% in FY18. So clearly Newgen is focusing on R&D to innovate. Now let us look at the financials and quarterly results. Now after Newgen announced its Q1 result, there was an article on Business Standard that says Newgen software slides after Q1 PAT drops 67% quarter on quarter. 67% drop in quarter on quarter, that is enough to create panic, isn't it? But the fact is that this news is misleading. And I tell you the reason. The reason is because Newgen business is cyclical in nature, and I will show you the trend. So this is how the seasonality you can see quarter on quarter in the business. So this is percentage of financial year revenue. You can clearly see. So this is from FY 2021. So last 3 years of analysis. It shows that the Q1 of financial year is always on the lower side. That has contributed 20% in the business, in the revenue of the company. And then as we proceed further in Q2, that increased to 23%, and in fact in last year it was 24%. Then again if we go to Q3, it increased to 28%, 27, 26. And Q4 has been the best quarter for Newgen, which is 29%, 30% and 30%. So this clearly suggests a trend that Newgen business is cyclical in nature, where Q1 has been the leanest quarter. It clearly says seasonality in business due to license-based business model, with Q1 being the leanest quarter historically. So do not compare Q1 with Q4. You should compare Q1 of current year with Q1 of previous year. And the fact that now Newgen is moving to subscription-based model, this seasonality is going to reduce. In fact, you can even look at the quarterly result pattern and you can figure it out. So if you look at it, in March 2020, the sales were 191 crore. Then it fell down to levels of 132 crore, and then it increased to 155, increased to 186, then increased to 200. So consistent increase quarter on quarter. Again in June it fell down from 200 crore to 160. Again it increased to 186, 203, 231, and again now in June 22 it has fallen to 188 crore. So if you look at, just compare it with last quarter, obviously it has fallen from 231 crore to 188 crore. And even if you look at net profit, it was 41 crore in March 20, and then it fell down to 9 crore. Then it increased to 29 crore, then increased to 35, then increased to 53. Again it fell down sharply from 53 crore to 22 crore in June 21. Again it increased to 31, 48 and 57. Now again in June 22 it has fallen to 19 crore. So obviously if you look at last quarter, which was 57 crore, compared to that there is a fall, a significant fall. But you should not compare it like this. You should compare June 22 with June 21. So that was 22 crore, and compared to that, current in Q1 of June 22, there is a fall of nearly 10%. And if you look at the revenue as compared to June 21, it was 160 crore, and in June 22, there is an increment of 7.5% in the revenue year on year. So the reason why there is a fall in profitability, the answer lies in the operating margin. So if you see, in June 21, it was 14%. However, it has fallen down to 10%. There are a couple of reasons for this fall in operating margin. First reason being that there's an increase in travel cost because of global inflation. And second, there is increase in employee retention cost. Because of high demand for IT employees, there has been high attrition in IT sector, and in order to retain the talent, companies have to give bonuses, and that is because one of the reasons why the cost has increased for the company, and due to that the margin has fallen. But eventually it will all normalize. Now let us zoom out and look at the long-term bigger picture, which is year-on-year growth. So if you look at it from March 15, it was 308 crore, then increased to 347, then increased 427, then 512, then 621, then 661, 673, 779, and now 807. So year on year, there's an increase in revenue consistently for Newgen. And even if you look at the net profit, it was 46 crore, then it fell down to 28, again increased to 53, then increased to 73, then increased to 102, then it fell down to 73, again it increased to 126, then 164, and currently it is trailing 12 month, which is just last 4 quarters, so it is 162 crore. Now if you look at the margins, this March 2021 was an exceptional year where the margin jumped very high, which is because of the global lockdown. There were no travel and all of those restrictions that resulted in fall in cost. Apart from this, if you look at it, now the margins have normalized, which is in the range of 24%. So all in all, if you look at it, the growth has been pretty good. So if you just compare last 5 years of data, March 17 to trailing 12 month, it was 51 crore, and from there it has grown to levels of 162 crore, which is pretty good. And if you look at the growth in their annuity based revenue in Q1 of current year, it has grown 25% quarter on quarter. And if you look at the subscription revenue, there's a sharp growth in the subscription business, which is where the company is now transitioning to. So it has grown 33% in Q1 of FY23. So that has been a pretty good growth in year on year revenue. And if you look at the diversification across verticals, so basically company business comes from various domains. So 8% of the business has come from sale of its product, 10% is from SaaS based model, which is software as a service, then 28% comes from ATS, which is annual technical support and annual maintenance cost, then 32% come from support, and 22% from implementation and other service. And if you look at the revenue split by vertical, banking contributes the most with 62%, followed with PSU, then BPO, insurance, healthcare. And if you look at the revenue mix by geography, India contributes 33%, EMEA 32, USA 24 and APAC 11. So there has been a pretty healthy mix across geography. Now if you look at other parameters of Newgen Software, look at its ROC, which is 27%, ROE is 22.1%, 3-year average ROC is 24.3% and 3-year ROE is 19.4%. So profitability has been pretty good. And even if you look at debt to equity, it is just 0.03, which is negligible. So company is virtually debt free. And so overall the financials are looking pretty good. It has got a market cap of just 2,400 crore. So it is a very small cap company, and it is bound to happen that when there is a fall, small cap fall quite a lot, and when there is a jump in the share market, obviously small cap companies grow quite a lot. And now if you look at what chairman has to say about Q1 result, Mr. Diwakar Nigam, who is saying that FY23 has started on a strong note with revenue growth of 18% in Q1 of year on year, with cloud and subscription revenue growing at 33% in Q1 year on year. Given the seasonal nature of our business, Q1 is a lean quarter for us. On the cost front, there has been an impact of elevated employee cost and gradually normalizing travel expense as discussed. However, Q1 margins are not a reflection of the year margin. So it clearly suggests that as we proceed further in the coming quarters, the margin is going to increase. Mr. Diwakar Nigam says, we strongly believe that we have a resilient business model in place with our products having significant leverage across both sides of the market opportunity, revenue enhancement and cost optimization. So this has been a very positive commentary from the chairman of the company. Now, if you look at the market where this Newgen company operates in, what are the prospects of this market? So there are basically three segments. One is process agnostic software that enables hyper automation, and that is a market considered as 46.3 billion by 25. Then second segment is content service platform, which is $9.35 billion by 2026. And third is business process management system, which is expected to be $3 billion by 2026. Now, if you total it out, it would be basically a $58 billion business opportunity for a company like Newgen. And that is basically equal to 4.5 lakh crore rupees opportunity. Out of that, Newgen has a revenue of just 800 crore rupees. So in terms of growth potential, the opportunity is huge, the market is huge. And if you look at the shareholding pattern, in fact, you can also see it from that where, if you look at the promoters, although they decreased the shareholding from 66% to 55.16 in June 21, but since then, if you look at last 5 quarters, promoter holding has been constant in the company. FIs have again reduced their holding from 20.5% to 14.75%, but here there are two key entities that have kept the shareholding constant. So one is Goldman Sachs India Limited. So if you look at it, it was holding 3.83% in Newgen in December 20, which has been kept consistent throughout the quarter. So it's been almost 7 quarters where Goldman Sachs has kept the shareholding constant. And even MIT, which is arguably the best technology institute in the world, has kept the shareholding consistent from 1.61% over the last few quarters. So these are the companies that are not selling their shareholding, and they're holding a significant amount of shareholding. So they are not selling it based on quarterly result, because probably they understand the future growth potential of this company. Now, if you look at the share price movement of Newgen, it is currently trading at levels of 354. And if we just zoom out in last 5 years, so it had its IPO around February 2018, and then for the next couple of years the price remains stagnant, because that was the time when small cap sector was not doing well. Then eventually COVID happened and the share price fell down significantly, but then there was recovery, and the recovery was very sharp. From levels of 109, the share price jumped to as high as 700 rupee. So obviously this jump was quite a lot, and since then there has been a correction. So if you look at last 1 year of performance, it was almost stagnant for nearly the beginning of this year, but then we saw global sell-off from FIs, and IT sector saw a sharp dip, and even this was reflected in Newgen. So it fell down nearly 45-50%. And again, this is not only Newgen that is falling. Almost every IT sector company has fallen, especially the fall is very high in small cap segment. Having said this, at current levels, Newgen Software is trading at a P ratio of 15. So for a company like Newgen that has got a very high profitability, a company is completely debt free and has got a bright growth prospect, a valuation of P ratio of 15 for me is undervalued. Even if you look at the analyst call, again, you should never buy simply based on analyst call, but I just want to give you an idea. So Jefferies gave its target in March 20. Again, this is not the latest target, but in March, on 30th March 2022, Jefferies gave its target to Newgen with a buy of a target of 650, and currently it is at 350. So basically, it's almost nearly double potential. And I remember in January 22, Edelweiss initiated a coverage on Newgen, and it gave a buy rating with a target of 900. So it is not just me. There are a lot of brokerage firms and analysts that are bullish on this company. But again, at the end of the day, you need to understand the potential of the company and decide whether you want to buy it or not. And trust me, do not just look at 1 or 2 quarter performance, look at the long-term bigger picture. Now, as far as future growth is concerned, one of the key focus area for Newgen is increasing the subscription revenue stream. Currently, Q1 and Q2 quarter for Newgen are muted and generates very low revenue, and Q3 and Q4 quarters generate the major revenue. One key advantage with subscription model is that it would help in reducing the seasonality in its business. Then second initiative is Newgen is expanding its market share across geographies and solutions. Currently, Newgen is operating in 73 countries with its multilingual platform and planning to grow its international footprint. Newgen is also developing the global system integrator, that is GSI ecosystem, for long-term engagement and relationship building with leading GSIs like Infosys, TCS, HCL, Tech Mahindra, etc. Recently, it has announced strategic partnership with Coforge. Newgen is constantly investing in R&D to add advanced features and technologies like AI and ML, advanced analytics, etc. Company believes that the next phase of growth would be enabled with implementation of these advanced technology. So overall, I believe that Newgen is on right track, and I still have my conviction on this company. As discussed, Newgen has been growing consistently on year-on-year basis, and even in latest quarterly result, the revenue growth is up 17.5% year-on-year. Although the net profit is down 10% year-on-year due to increased travel cost and employee retention cost. And this high cost is not the only problem with Newgen. Every IT company is facing this challenge, but this cost would eventually normalize. Yes, there can be some impact of slowdown in the US market in the short term, but the long-term growth prospects are still intact. So fundamentally, there is no problem with Newgen business. Hence, for me, Newgen at levels of 350 rupee with P ratio of 16 is a very great valuation to add systematically. If the share price fall further, it would only make it more attractive for long-term investment. But like I said, it is not a stock tip. At the end of the day, you should do your research and invest only when you are convinced with the growth story of the company. But once you invest, have conviction in the company. Don't just look at 1 or 2 quarter performance to decide whether you should buy or sell a stock. If you are a long-term investor, then look at the long-term bigger picture. Thanks for watching this video. I hope you will find it useful. If you have any request on stocks or financial topic that I should cover, then mention it in the comments. I'll see you next video. Till then, take care.